Hey everyone, Risk Mr. Thrive and Survive rebooted, and it is time to get going here with another video. This is February 1st, 2016, and we are looking first at the US dollar. Now I'm going to be setting down some kind of rules I'm going to be doing differently for Thrive and Survive rebooted from now on so that these videos can be quicker. Please let me know if there's something on here that you would like me to cover that I'm not covering. For example, I'm not going to cover crude oil. I'm not sure if that's important to people, but if you want me to cover it, please let me know. If enough people do, then maybe I will. Or if there's something else, some other major instrument that you want me to cover, I'll do that. I'm not going to cover any individual stocks because that would be sort of an indication that I want you to participate in that stock, and I definitely don't want that to be the case at all. This is most definitely not for any kind of investing on your own. That is between you and your financial agent. I'm sorry I have to repeat this every time, but you know I do. None of this is to be taken for financial advice. So let's get into this. This is the US dollar index, and I will not be showing this very often unless we penetrate a line that's coming up very soon here. This is going back to 1991. You can see back in 1985 over here, if you follow the cursor, the USDX, the US dollar index, hit its high of 165. And this was when the Paul Volcker of the Federal Reserve raised the interest rates, I believe, to 20%, 20, 21%, something like that, during the Reagan administration. The problem was that we had runaway inflation before that from the Carter administration, which was getting ready to move straight into hyperinflation. And Paul Volcker recognized that there was problems, and he just kept raising rates to kill inflation, and it worked. And since then, we've had our ABC retracement back off of that down, and we have started a wave one down now in the opposite direction. Now, we had our wave one low in 2008 during the financial crisis, and we got to about 72.5 on the USDX. That is the US dollar index. So we have a swing of 165 down to 72. And the depreciation of the dollar just on this chart right here is quite showing, isn't it? In any case, we are in a situation here where we are looking for an Elliott wave 3 down at some point, which is going to be disastrous for the US dollar. And again, this is the cycle level. There's only one thing above this, and that's the super cycle. And this type of cycle is one that can end a currency when it gets to its wave 3. The question is, are we getting close to that wave 3 now, or do we have more time to go? And the next chart will show that more clearly. But I just wanted to show you that we did have the one down, no doubt about it. That happened in 2008. The question is, we would have an ABC retracement up to counter this wave one down. In fact, this whole thing was a wave one down here. So we're probably looking at from here down is a wave one retracement, about 120. So we could actually, since wave twos can retrace 100% of the wave one decline, we can get back up to about 120, 122, whatever the high was here, maybe 123 on the way down. And it was looking like, when you have these ABCs, the C, a lot of times, since it is a third wave or it will extend on its own, we'll get a 5 wave up. And that's probably what it is in right now, which means we are ready to turn back around and come back down and form our B wave down here instead of back here. Now, anything in blue here is the alternate count. So the question is, do we break this right here, which indicates we're going to end this wave 2 very soon, or are we going to head down without breaking here, and we're going to get the exact amount you're going to be looking for, and head down here, and we've got a little bit more time. So let's go ahead and switch charts, and I think that'll make more sense what I'm talking about here. Now, at least for now, this is probably the chart I will go with to start from now on as I do these updates, which probably will be on a weekly level in case, unless there is some reason to do it more often. If we break this to the top, I will break in whenever that happens that day and let you know, because that could be very significant. A slight breach of this, because we're in that possibility of it being a wave that could be a running flat, isn't necessarily, the exact breach isn't necessarily a sign that we're in danger, but it's a very good sign anyway. Let me let you know here. This is the drawing of the USDX. Again, the wave 1 low was 72 on the USDX in the summer of 2008. The question is, are we here on this circle here, or are we up here at this circle here waiting for our wave 2 to complete? Because after that, we're going to have a dollar crash. That will be our cycle wave 3 down, and that is going to be one hell of a crash, because we are talking about at least a 0.52 in the index at the end of wave 3. If we're still around as a U.S. currency, we haven't switched over to something else by then, we'll have a little bit of a kickback bounce and then a lower low after that into a wave 5 low. So these are very critical times. And the question is 2016 when we start heading down in that wave 3 this year? And in any case, if it is this year, it would be most likely, I think, from the timing that it would be around the first week in June. Now, 100.72 on the USDX, that is the number to look at. That is the critical number, 100.72. That was, again, this is the alternative count here in blue. If this alternative count is correct, the wave C comes up in 5 waves and then it completes the wave 2. It would mean wave A and B are already done, and it means we're here on the circle just waiting for a little bit of a break higher, and then we start the big crash down. Now, if we turn around here, this looks like it could be starting a 1, 2, 3, 4, 5 down, and we are heading into our wave B, which is still probably the slightly most likely one. But again, as long as we're up in this area here and we don't significantly break either side of this, I will be paying attention to this for you. This is a big deal. So just wanted to bring you up to speed on this. For now on, I will just come to the start and this chart to start with, and we'll go from there. So let's move on to the next instrument now. Okay, we're looking at silver on a weekly chart. This is a chart from the Elliott Wave Marketing Service. I will put their link again below so that you can get I think it's a 1 or 2 week free trial with them. Don't need a credit card or anything like that. If you want to get caught up on what's going on, and if you are investing, I wouldn't do it at all without looking at their stuff. I can tell you that right now. Anyway, this is the weekly outlook of silver. And just wanted to give you back to 2002 when this started, how it's forming. You can see right now we are in what's called a bullish falling wedge, and when that wedge pattern ends, we break out to the north almost every time. The thing with silver is this, and the same thing with gold. The retracement levels now are starting to get so deep that if we were to continue down and not break to the north here, but it looks like gold and silver are both strengthening here. If we do break out to the north of this wedge, and in gold you'll see the pattern there, then this would verify A is done. We're going to head up in a B and then down with C, and that would probably end maybe 2 or 3 years from now. But I just wanted to give you the long picture here. We've completed 1, 2, 3, 4, 5 up to a cycle level wave 1, and now we're working our way down in what's called a 5-3-5 ABC wave 2 pattern, and wave A has come down in its 5. 1, 2, 3, 4, and 5. The question is this complete? I believe it probably is, and we're going to be heading higher in price from now on. I was confident enough to buy silver myself last week because that's how I feel about this. Now let's go to a chart that's a little bit closer in on a daily chart. Actually, this is still on a weekly basis here, and what I want to do here is I want to show you how I'm going to be doing these charts. This is different than how I've done them in the past, and hopefully you all will like the way it is this way. I'm sorry, this is This is that's a weekly chart. I'm going to be drawing out the cycle part of the wave we're in, just so you can see where we are and where we're heading next. And wherever we are at the closest, what's coming next, I will be most detailed with the waveform. For example, this is a mistake, by the way. This is 2003. We had the low here, not 1993. And in 2011, which is right here, we had our cycle wave 1. We had 5 intermediate waves up to wave 1. You're seeing here the end of wave 3, 4, and 5. Again, it was around this period right here that I suggested that we were probably starting our wave 2, and I caught so much flack and heat and hatred, it was unbelievable. But as you can see, even Jim Sinclair down here was still saying this was all just temporary. Well, as you can see, it was more than just temporary. We are 5 years later, still heading down. Maybe we're finally turning the bottom. We're finally looking like we are making a nice rounded bottom. However, right here is where I believe we are with silver. A, B, C. We have completed A, apparently, or very close to completing it right now. So I've got 12 of 2015. So when would I expect wave B and the time to sell my silver? This is me personally, not you. I will be selling my silver, it looks like, in September of 2017. I am using Fibonacci time for this, and I won't explain that in this video because I don't want it to be that long, but I will get into that in other videos. Now, since our A is done here, all this down here is A, now we're expecting an ABC up to an intermediate B, somewhere up in here. I am projecting, actually, I don't have it on this chart, I have it on one of the charts. I actually have a price I am projecting. Should I say that right now? Why not? I think I'm projecting, don't hold me exactly to this because I can't remember precisely, but I think I'm projecting $43.70. So somewhere in there, within $1 of that, I'll probably be selling my silver. That'll be in this area right here, pretty close to this high here. But there are most definite reasons why I think that's where we're going. We could go higher. It could be a running flat B, just like the S&P 500 and many of the U.S. equity markets that way outdid their wave 1. In any case, you can see I'm much more detailed with showing you now the ABC up, and then you would have 5 waves down in the wave C. So you can see I'm breaking that down quite well for you, whereas this whole thing here, I'm just giving you the broad strokes, so to speak. I'm not giving you the detail. Why? Because we're not there yet. When we get there, I will break it down what we're going to be expecting as we go here. Now, I will also have on the charts where I think we are, and this is for me. This is bearish mode. I actually should not have really pulled the trigger on silver last week because I might get a lower price because we're still in bearish mode. However, I happen to have financial things that sort of forced me to either do it last week or don't do it for a long time. So because of that, I did it. But we are still in bearish mode, and normally I would not buy until we switched over to bullish mode. There's also a neutral mode. But in these charts, I'm going to let you know if I was playing the market, and I may be or may not be. I may not be telling you about it. I would be telling you where I'm looking for the market. So at this point, I would not be looking to buy because this is a bearish part here. I'm also going to be pointing these RSI figures out, and below here, the MACD and the Aruns and different things like that, as I see that they are important. Most of the time, these things, I use these for to look for divergences. For example, this low right here where the A is, you can see that that was actually oversold right here. We had another significant low right here, and look where that was. So what happened was we had a higher low up here, but a lower low down here. Now the next significant low was right here, and that corresponds here. So you can see we could draw a line that would go right from the bottom here. This is called a bullish divergence, which means very soon we're waiting for silver to switch from bearish to bullish. So let's go into the next instrument now. Now we're looking at the S&P 500, and this is also an Elliott wave market service chart that I want to show you. I will not be showing this on a weekly basis, that's for sure. Again, it's a monthly chart, so very rarely am I going to need to show this because one of these little lines here is a whole month. In any case, I wanted to give you the broad picture of where we are on the S&P 500. And by the way, all except for the NASDAQ in the North American markets are on the same wave count. The NASDAQ is on a slightly different wave count, but there's no difference as far as it will be turning bearish when all of these turn bearish as well. It's just a slightly different count. And that's mostly because the NASDAQ is not as old as these other ones, so it's a little bit different area of its count. In any case, we had a cycle, not the grand super cycle, but just below that, the cycle wave 3 high, which occurred back in 2007, late in the year, fall of 2007. Then in 2008, 2009, we had the big financial crisis. Lehman Brothers failed, and Bear Stearns and all those issues. And we ended up with a low in the S&P 500 of 666. So, and as you can see, its wave 3 came up in 5 waves, as impulse waves do, 3, 4, and 5. That's why I say I don't care what the manipulation is. It always works out. It always works out. It always works out. There's always been manipulation, and it's always been recorded. Don't let anybody tell you you can't go by charts because they're manipulated. Those are people who really don't understand the markets. Even the fifth wave came up in 5 waves. This is called an extension. When one wave itself, from 4 to 5, came up in 5 subwaves. 1, 2, 3, 4, and guess what? Wave 5 extended on its own. 1, 2, 3, 4, and 5. So actually, there's a couple of 1s and 2s. You've heard me say before, when waves get started, they'll come up in a series of 1s and 2s. So this is probably a 1, 2, 1, 2, 1, 2. This whole thing here is 3, which was an extension on its own. This broke down into 5 waves, then 4, then 5. It's beautiful. Works. It's just wonderful how it works. Too bad sometimes you can't tell when you're in it, where you are. But these monthly charts are very, very easy to read compared to the dailies and the weeklies. That's for sure. Anyway, so this was our 1550 was on the S&P 500. Then we fell off the cliff, so to speak, down to 666. That was our, after wave 3, you have a wave 4, which is a corrective wave down with an A, B, C. Now, normally B would not exceed the wave 3 high. However, this is the one exception where it can happen if it's a wave B and it comes up in what's called a running flat. Just look how flat looking this whole thing is. And I mean, it's described perfectly. That now appears to be over, and we're going to leave this chart now and come to one we're going to be looking at on a weekly basis. Okay, let's get familiar with this chart because this is the one we're going to be seeing pretty often here. This is the S&P 500 on a daily, and I will probably also do a weekly chart for you as well as we go along here, indicating that our wave 3 that we just looked at was in the past here. It's off the chart. It's well off the chart. Here is that wave B top that we talked about before, and that is down here. Okay, the S&P 500, we've had a wave up 1, 2. Wave 3 was 2007. Wave A lows, the 666 lows, happened in 2009, February, I believe, of 2009. And since then, we've been working up in this running flat wave B. Notice that now that we're past wave B or just at wave B, I have the red circle, and I'm more detailed now with what's supposed to happen now. What's supposed to happen now is 5 waves down. 1, 2, 3, 4, and 5. And my target for the S&P 500 is 500. We are currently at 1919. So, and we topped out, where did we top out? Around 2,130 on the S&P 500 was our high. And now we are actually 1,900. No, I'm sorry, that's right. 2,135 roughly was our high. And we've already lost, we're down to 1939. And, it's 200 or 300 points and people are just freaking out. Wait till we get down to 500. Wait till we lose 1,300 more points. You'll see people freaking out then. In any case, they were all freaking out, if you remember, 2 weeks ago. This right here, this big drop. This was the start of the new year, remember? And all this was a very small wave 3 of the wave 1 down. We haven't even hit the wave 3 down yet. It's wave 3 of wave 1 that had everybody freaked out. Okay, we've had 2 minor wave 3s down. In both cases, people have been freaking out. In any case, we are now in our wave 4 up. Then we're going to reverse, come down to wave 5. We'll probably exceed this low. We don't have to on a wave 5, but usually it does. We'll exceed the low of 1810. So once we get below 1810 at any time there, we should stop and reverse. Then we would be on our wave 2 up. Wave 2s are the ones that fool everybody. That will tell everybody, we're back into rally mode. Then it hits the fan. If war is going to happen, that is probably going to be the time. Something is going to really drive these down in a hurry, folks. And I don't know what it's going to be, but it will be something. So, any case, that's where we are right now. I don't know if the wave 4 is over yet. This wave 4 should have come in an ABC. A, it looks like B here is a triangle, and C right now, but that C would usually come up in 5 waves. I only see 1, 2 maybe for this. So we probably have 3, 4, and 5. A little bit more up to go. Maybe not. It could be over. If I drop down to a 12-hour chart or something like that, I might be able to see more movement. But in any case, it looks like we got a little bit more to go up. Probably won't get higher than 1990. Okay, looks like there's a lot of resistance right there. And then watch for people to freak out again. But then, like I said, then we'll just be right here. Then we'll go in a wave 2 up, and then the big one hits this summer, and then everybody will be freaking out. Now, unlike the silver and gold charts, we haven't gotten the gold yet. You will find that this high here was here. This high here was here. And this high, well, each high was a little bit higher, but anyway, the bearishness is corresponding with this. So there's no like bullish divergence as we're making lower highs. So we should expect this to continue. Right now, the S&P 500, I would say, is in bearish mode. I didn't put that on there. However, if I was playing the market, I would have switched to bearish. If I remember correctly, it was way back in, I think I've told you the date before. I think it was August 27th, something like that. Or was it July 27th? July 27th, I think is when it was. So anyway, that was predicted a year in advance. I am blowing my own horn there just because of so much hatred I took before for things. But anyway, let's get into gold now. Okay, here's gold again from Elliott Wave Markets Service. This is gold on a weekly basis, and I'm showing you this for the overall Elliott Wave pattern. We are not going to show this very often, although we probably will show this more often than silver, just because silver follows gold, folks, not the other way around. Silver will expect silver to be gold on steroids. I expect silver to way outperform gold as far as percentage-wise. That's why I got silver this time and not gold. Anyway, we had our cycle, not the grand super cycle, but the 100, the cycle wave 1, lasted from late 1999 to the middle of 2011, August of 2011. And we went from $230 an ounce up to $1,900 an ounce. So, with that being said, how long did that take? Well, you see, it's a lot of years, and that was just wave 1 up. It took over 11 years for that to happen. It came up, believe it or not, in 5 waves, even with all the manipulation. Wave 1, 2, 3, 4, and 5. Okay, the big extension was 3. Look at the distance of wave 3. That really extended out. Each wave extended out nicely, and the impulse waves, 1, 3, and 5. And in any case, so that is our wave one up, and now we are working down in our wave B, which should come down as A, B, C, and then we will take off in the wave 3. So as we, advance quite a bit, we'll come back and take a look at this chart. But let's go down to a larger picture here on a daily chart. Alrighty, you're going to be seeing a lot of this chart here, gold on a daily basis. And this is more what I was talking to you about. I'm going to eventually get this on all the charts. Right now we are neutral on gold. Remember, silver is on bearish. They both need to go to bullish before I would normally buy. I did buy somewhere in here for silver. In any case, that's me. I'm not ever telling you what to do ever with your finances. This red circle right here is where I believe we are. We may not actually be done A yet. Until this switches to bullish, we can't tell for sure, although it looks like an absolutely beautiful rounded bottom shape. And if you ever want to see perfect technical analysis, even as much as everybody knows that gold is manipulated, it's admitted that it's manipulated even by the governments themselves. These banks have admitted it and paid fines and continue to pay fines because they're making more money than what the fines are. It's corrupt as hell. But markets always have been corrupt as hell. Guess what? It come down in 5 nice beautiful waves every single time. And then the corrections go up in ABCs. And they break into 5-3-5 waves. So I don't care how much manipulation it is, it works out. So 1999 we had our cycle low in gold, and you saw where we worked up to our cycle wave 1 in 2011. Since then we've been working our way down in A. I believe A is probably almost ready to switch it to bullish, but not quite yet. Let's just make sure that this isn't a wave 4. We may have miscounted and then come down here. Remember, it gets harder as you get lower. The higher the charts, the easier it is to tell what count you are in. In any case, wave A appears to be done, which means we would come up in a wave B. I almost wish that A would have continued on down, just like we saw with the US dollar, where we actually might be having a very short wave 2. I would love to see gold take off now. I just don't know if that's going to happen or not. A lot may depend on that US dollar. If that US dollar all of a sudden breaks to the north and exceeds that figure, 103, whatever it was, and it should spike then to the top. That would spike gold and silver down. This would be a wave 4. And I would be probably pretty happy then, because even though short term it would be pain, so to speak, there will be a very good buying opportunity in gold and silver coming up very shortly, and then we will be off to mega races going up like you wouldn't believe, like you haven't seen yet, as the dollar would be tanking. So either way, when the dollar tanks is the same time the gold and silver are going to take off most likely. Now, if we have war, that is a case where you end up with the possibility of both of them going up. The dollar is still seen by fools as a safe haven, so they could still go there. Treasuries, by the way, are continuing to look very bullish. There's no doubt that treasuries are in one of the biggest bubbles of all time, but they're not ready to burst yet, folks. They got a while to go, and they're going to go very high compared to where they are now. I believe it was was it the 30-year just went under 2%? One of them did. Maybe it was the 10-year just went under 2%. It's got to be the 10. The 30-year, probably by the time we're done, will probably be under 2%. And I mean, that's really going to go low. So with that being said, again, we're probably right where this red circle is in a series of 1s and 2s, trying to do a wave 3, 4, and 5 up to our A. Then we'll have a couple months of going back down in a B, and then the wave C should be the strong push up. We may even go up as high as 1900 again in gold, 1900, 1950, whatever the high was, before we sell off and have our wave 2. Now this wave C is going to take as long or longer than wave A. They're usually pretty much, if you give them equal time periods, you're usually pretty safe. And this time we went from 2011 to 2016 for A. That's 5 years. Now let's say this wave B takes 2 years. So that takes us to 2018, and then another 5 years. 2023 would be the next time to buy into gold. So that's why I'm going to sell before then, and hopefully I'll have money in 2023 to get back in. So I'm going to end the video here. Let me know if you want me to also begin to bring back in more political talks with what's going on. That may be going on anyway, because I still am holding my ground that Obama is not going anywhere. If we do have elections, which I still do not think we are going to, still think it's most likely he's going to declare martial law. I think he's trying his best with this Oregon situation and with passing executive orders with against the First Amendment, and he's also abusing the Fourth Amendment. I believe he's trying his best to cause civil unrest, and to me the feds are trying their best in Oregon, and he is just itching. He's got it in place, folks. He declares martial law. He pretty much becomes the king. The vice president doesn't even have a say, much less Congress and the Supreme Court. He really does become a Hitler. The NDAA, that was the one thing that really gave it to him. And that was his famous speech, his little quip as he signed it. Even though I have the power, I'll never use it. Well, why did you ask for it then? Why did you sign it if you're never going to use it? That's another don't make no sense. You don't sign something, put something in the law if you don't ever think it's going to be used. So the other out, of course, is what he's working on. He's already putting it out there that he wants to be Secretary General of the United States. He's actually taken on that position one day he did, which is unconstitutional. He could have actually been impeached on that. It is against the Constitution for the President of the United States to take on any other title, dignitary or otherwise, in the world while he is President of the United States. And he took on the role of being Secretary General of the United Nations one day last year. An impeachable offense. Of course, nobody's going to impeach him. In any case, he has let the United Nations know that in no uncertain terms that he wants to be the UN Secretary General, and you can believe then that before he leaves office that there will be executive orders that will allow him as Secretary General, that if he declares some sort of whatever, that the United States will be totally and 100% subservient to the United Nations. Now, people don't want to believe this, but what other president have you ever seen that has said they want to be the UN Secretary General as soon as they leave? Every president we've had pretty much up to now, maybe with the exception of Clinton, has really, they have not had any, they haven't, allowed ourselves to even think about having any kind of sovereignty issues with the United Nations, giving up any of our rights to be subservient to the United Nations. And yet Obama's big thing is to make us subservient to the United Nations. Bad times are coming, folks. He's running out of time, and the people that really want to bring the New World Order to total fruition while Obama is in power are running out of time. Look for things to get worse overnight. It will be something that probably can't be blamed on him, but it will be him. It may be even a supposed natural earthquake or other unbelievable major disaster that he actually had control over. We shall see. Anyway, I will end this video here. Thanks, guys, and I'll be back next time. Bye.